Ruchira Paper is well placed to benefit from favorable trends in the paper sector. A diversified product makes well-integrated operations, lower net debt levels, improving financials and reasonable valuations compared to other mid-sized paper companies makes Ruchira a worthy stock to bet on. Managed by promoters with over 4 decades of rich industry experience, the company registered new milestones with proactive investments and upgradations. As the marketplace evolved, it reorganized its production capacity by allocating writing and printing paper capacity to value-added products. These focused projects reduced cost, strengthened volumes and improved margins. Ruchira Paper's healthy operating efficiency is supported by captive power source of 8.7 megawatt, chemical recovery plant and agricultural residual-based raw material. Over the years, there's been a growing focus on water efficiency. In fact, in FY22, the company invested on a sizable effluent treatment plant upgradation and targets total reuse of water. Ruchira also enjoys competitive manufacturing costs versus higher greenfield project cost of a similar capacity. With business sustainability in sight, the company has focused on building a complement of two businesses, writing and printing and kraft paper. It aims to de-risk the seasonal nature of kraft paper by modifying its existing paper machine to facilitate manufacturing of cup stock paper. New products have been introduced to capitalize on increased replacement of plastic packaging and revival of marriage market post-COVID. In FY20, as the demand and realization suffered due to COVID-led lockdowns, the company used time and resources to modernize and upgrade existing machines and launched new products, white copier paper, in the WPP segment. Now this, along with surging e-commerce, supported demand growth, which led to highest production. This was followed by the manufacture of new grades of paper for cup stock called Meer and wedding cards called Mogra in FY22. The new products generated higher realizations than the WPP average as the company crossed 600 crores in turnover. Manufactured on a lower production cost, these high-margin and fast-moving brands attracted customer traction, which boosted profitability. The company reported a good set of numbers on the back of record production sales volumes, which were up 35% YOY, and better sales realization in FY22. Also, it was able to optimize costs despite inflationary pressures. Results were driven by its established market presence and strong, diversified business model. The decline in the performance of white paper segment was offset by the recovery of the kraft paper segment. While average realization was up 31.9% YOY, improved scale of operations and better asset utilization drove significant year-on-year improvement in EBITDA margins in FY22. The recovery in financial performance was on the back of volume and value growth. Annual increment in production was driven by 25% and 7.5% higher WPP and kraft output respectively. Average realization for WPP was up 23.2%, while for kraft paper it was up 35.8% YOY. We believe the enhanced production capabilities will continue. Output during Q1 FY23 was 37,196 MT, indicating higher operating levels than the previous year. The company continues to grow the business through accruals and has moderate debt levels. Ruchira Papers broad-based its business by capitalizing on growth in value-added products, which helped the company with continuous brand-driven revenue growth. As the company expands production with a well-diversified production mix, the focus on debottlenecking with low capex will lead to further decline in capital cost per ton. It will also strengthen its overall competitive position. Now, we believe that sector tailwinds, education reforms and ban on single-use plastics could be the key impact areas for the industry. The newly added products, coupled with a robust capital structure and key input security, provide sufficient headroom for growth visibility over the long run. Also, we see margins improving on the back of increased scale of operations and cost optimization measures. The company is well funded. It has high internal accruals with an under-borrowed balance sheet which will aid new capex plans for future growth. Ruchira Paper's focus on adaptability coupled with locational advantage, which essentially means its proximity to raw materials and markets, places it among our top bets. Sustainable improvement in profitability will remain a key monitorable over the medium term. The stock is trading at 4.4 times EV to EBITDA and 6.2 times price to equity on FY24 estimated earnings. Valuations are reasonable given the pent-up demand for printing and writing grade papers. Also, sharp growth in the demand for kraft and packaging paper will boost earnings visibility further. However, the stock price remains exposed to elevated input costs led by geopolitical crisis, and of course another risk to watch out for will be the inherent cyclical nature of the paper industry.